IRS handles automatic stimulus-style payments and how that connects to Social Security, pensions, and benefits for seniors in the United States. Many older adults hear big promises or scary rumors about checks in the mail, surprise deposits, or special programs. The first thing to understand is what people mean when they say that the IRS will send automatic stimulus payments. The IRS is the federal tax agency. It collects income taxes and also sends out refunds and certain tax credits. During the COVID pandemic, Congress passed special laws that created 3 rounds of large payments to individuals and families. These payments were known as economic impact payments and were often called stimulus checks. The IRS was in charge of sending those payments. For many people, the money arrived automatically, either as a direct deposit or as a paper check or debit card. Social Security and SSI recipients often receive them without filing a tax return because the IRS used information from Social Security records to process the payments. That experience left a strong impression. Many seniors remember money appearing in their accounts without having to do much, and they now hear claims that something similar is about to happen again. If you have new to my channel, please subscribe our channel for more updates. As of the latest solid and reliable information, there is no new nationwide federal law that creates a 4th round of broad stimulus checks like those in 2020 and 2021. That means the IRS is not currently sending a brand new general stimulus payment to every senior or to all Social Security recipients. However, the IRS is still sending automatic payments in other ways. The agency continues to issue tax refunds when people file their annual tax returns. It also continues to process certain refundable credits, including credits connected to the earlier stimulus programs when people did not receive the amount they were due. This is where things can get confusing because a tax refund that includes missed stimulus money can feel like a new stimulus check, even though it is technically money from a past program. The earlier stimulus payments were tied to tax years and were handled through the tax system. If someone did not receive the full amount at the time, they had the right to claim the difference as a recovery rebate credit on a later tax return. For example, an eligible person who never received a first or second stimulus payment could sometimes claim those missing amounts when filing a tax return for the year that followed. In many cases, the IRS would then send the money as part of the tax refund. Seniors who do not usually file taxes due to low income sometimes learn later that filing a simple return could bring them hundreds or even thousands of dollars in credits that they had missed. When the IRS processed those returns, the payments often arrived automatically by direct deposit or mailed check. That pattern continues. If a senior or a low-income adult was eligible for stimulus payments in the past and never received them, or received less than they should have, filing the appropriate past tax return can still trigger an automatic payment from the IRS in some situations. The exact years that can still be claimed depend on filing deadlines and other rules, but the basic idea remains. The money is not a brand new stimulus created today. It is the remainder of an old program that is being paid through a tax credit process. For the person receiving it, this difference is not very important. What matters is that money arrives and can be used for urgent needs, but it is important not to be misled by claims of brand new stimulus laws that do not actually exist. If you have new to my channel, please subscribe our channel for more updates. Understanding how the IRS sends money helps seniors and families make better plans. When a tax return is filed, the IRS looks at income, withholding, tax owed, and any credits. If the total of withholding and credits is more than the tax due, the difference is refunded. That refund can be sent automatically by direct deposit into a bank account or onto a debit card, or it can be mailed as a paper check. The taxpayer chooses the method when filling out the return. For seniors who receive Social Security, the IRS can also use information from Social Security records when laws require automatic payments, as it did during the pandemic stimulus period. However, without a current law, the IRS does not simply invent new stimulus checks on its own. It only follows the laws that Congress passes and the president signs. For older adults, pensions and Social Security benefits sit at the center of monthly life. These steady payments cover rent or mortgage, utilities, groceries, medicine, and basic needs. Social Security retirement and disability benefits are paid by the Social Security Administration, not the IRS. but the two agencies are closely linked through taxes and records. When stimulus payments were sent in earlier years, many seniors received them automatically because the IRS used data from Social Security to identify people and deliver payments. That link between the IRS and Social Security can make it feel as though the same thing can happen again at any moment. In reality, both agencies are limited by the laws that govern them. Social Security benefits themselves are not stimulus payments. They are earned benefits based on a person's work history and contributions through payroll taxes. Each year, Social Security may increase benefits through a cost of living adjustment, often called a COLA. This adjustment looks at inflation and raises benefits to help keep up with rising prices. In recent years, COLAs have been larger than usual due to higher inflation. These increases show up automatically in January payments and remain in place going forward. For seniors, this annual raise can be just as important as a sudden stimulus because it permanently pushes monthly income higher. The IRS has no role in deciding the COLA, but it does sometimes collect taxes on Social Security benefits when total income is above certain levels. If you have new to my channel, please subscribe our channel for more updates. Pensions add another layer to this picture. Many seniors receive a pension from a former employer, such as a company, a school system, or a government agency. A traditional pension pays a set monthly amount for life, based on years of service and salary. These pensions are usually taxable income, and the IRS collects tax on them through withholding or when a tax return is filed. However, they also provide valuable stability. Some pensions include their own cost of living adjustments, while others do not. When a pension has no COLA, its real buying power falls over time as prices rise. In that situation, stimulus-style payments, Social Security COLAs, and tax refunds all become even more important because they help cover gaps that a flat pension does not fill. For seniors with defined contribution retirement plans, such as 401(k), S, 403(b), S, or individual retirement accounts, the IRS has another role. These accounts often give tax breaks when money is contributed and then tax the withdrawals in retirement. The IRS sets rules for required minimum distributions for certain accounts, meaning that at a certain age, people must begin withdrawing at least a minimum amount each year. The money withdrawn is usually taxable income. These withdrawals can affect eligibility for some income-based programs and can change the tax treatment of Social Security. The IRS does not provide stimulus through these accounts, but its rules shape how and when retirees can access their savings. For seniors who have very low income, supplemental security income is another critical benefit. SSI is different from Social Security retirement or disability, although the Social Security Administration handles the SSI program. SSI provides a monthly payment to people aged 65 or older, blind, or with disabilities who have very limited income and resources. The IRS does not pay SSI, but stimulus payments in the past were often issued automatically to SSI recipients because their information was already on file. When earlier stimulus laws were passed, SSI benefits did not count as income for the purpose of reducing the size of the payment. That helped many low-income seniors and adults with disabilities. When new stimulus rumors appear, people receiving SSI, Social Security, pensions, or other benefits often feel uncertainty. They hear that the IRS will send money automatically and feel hopeful, then later learn that no such law exists yet and feel disappointed. It is helpful to separate what has really happened from what is only talk. The real events include the 3 pandemic-related stimulus rounds, the option to claim missing stimulus through the Recovery Rebate Credit, and various state and local relief programs that use tax agencies to send money. The unconfirmed claims often involve talk of a new national stimulus that has not actually passed into law. Staying grounded in verified information protects older adults from false expectations and from scams. If you have new to my channel, please subscribe our channel for more updates. Scams are a serious danger whenever stimulus or IRS payments are in the news. Criminals know that many people are anxious about money and willing to share personal information if they believe a payment depends on it. Scammers may call seniors and claim to be from the IRS or from Social Security. They may say that a new automatic stimulus payment is waiting but cannot be released until the person confirms their Social Security number, bank account, or other details. They may claim that a fee must be paid first to unlock the payment. These claims are not truthful. The real IRS does not demand payment in gift cards or threaten immediate arrest over the phone, and it does not require fees to release stimulus money. Any genuine automatic payment the IRS sends, including tax refunds or remaining stimulus credits, arrives without a fee. Guarding personal information is one of the most important steps an older adult can take. Protecting the Social Security number, birth date, and bank details helps block many scams. Shredding papers that contain sensitive information rather than throwing them in the trash also protects privacy. Being cautious with phone calls, emails, and texts that mention money or government agencies is wise. If something sounds too good to be true, especially when it involves instant large payments with no clear explanation, it often signals a scam, not a real IRS action. If you have new to my channel, please subscribe our channel for more updates. The knowledge shared here gives seniors and their families a clearer view of how money moves from the IRS, Social Security, and other systems into their hands. It turns a confusing topic full of rumors into a set of understandable steps and realities. With that understanding, older adults can look at each check, each deposit, and each letter from an agency and know what it means, why it arrived, and how to use it wisely. This kind of calm, grounded awareness is one of the most powerful protections a person can have in retirement, because it honors both the limits and the strengths of the systems they spend a lifetime paying into.